Hello, everyone. Hello, Arif. Yes, they paid the price, but ForexAnalytix subscribers and the FACE community was not penny wise and pound foolish. So I believe, hi Tosin, how are you? Ziggy? I believe for every drop of rain that falls, a flower grows. I believe that everyone was prepared for this collapse in the pound. Yesterday I opened the show with a tradable pattern, bearish pattern by Gregor Horvat. Okay. Who remembers how I opened the show yesterday? Great call. Better than good call. All right. Who remembers that when Blake was shorting the pound earlier in the week, Nicola Duke had a harmonic pattern and a level to get short between 70 and 90 up here? Who remembers that? Who remembers Blake saying he wanted to be short cable into the election? Also, who remembers Nick saying that we would predicting we'd have this type of outcome? So who capitalized on all that great input? I know Blake doesn't like to ask for numbers. Okay. Hardianto yesterday called. Good for you, Brian. All right. Good for you. But I think it's important that I reinforce the great work and the effort of the ForexAnalytix team. It's not I told you so. It's just like, yeah, good call, Jess. Hardianto called the break to under 140 and Guppy. Dan Norberg was short the pound. So it's like an attorney building the case. And I'll tell you guys, you know, I've been around, ran a community on FX Street, you know, the largest portal for FX traders, and I've never seen more talent in one place. The community plus Steve and Blake and Nick and Rega. I mean, what a great idea Blake and Steve had to do this. Okay. Thank you, Ron. So, if you had a good month in the pound yesterday, I'd say you subscribe. Hi, David. How are you? We have a great guest today. God, I wasn't even bringing up the content. Also, I want to bring up one point, okay? And I have a lot of respect for all of these guys. Adam Button thought we'd rally after the election, and Adam's top shelf, okay? Brannigan came in, was bullish, thought the pound would rally after the election was out of the way. Very smart trader, very good analyst. I saw Mark Chandler on, he was on it last night, good. I saw Mark Chandler on CNBC talk about he was looking for a rally to 30.50 after the election, and then some profit taking. So, and they're all great. So another point, even the best are wrong. And Adam was on it last night and got short on the failure. He's a great news trader.
Hey, how's it going, Dale?
Hey, how are you, Blake?
Good. Just jumping in really quick. Got a couple of things that popped up on my screen.
Sure.
But I want to let you finish your conversation.
Okay, I'm finished. I mean, I rest my case. Face is the place, Blake. I mean, really, great preparation. No, what?
Ace is the place.
Face.
For the friendly hardware man. Isn't that an old commercial?
Oh yeah. Oh yeah, I forgot about that. See,
All right.
there's nothing new under the sun.
All right. Well, first of all, yeah, I can't ignore the strong Canadian data. The Canadian is actually seeing some upside pressure right now, and that is closing in. It's pushing us towards, and I'm going to take us into the charts here.
Good, buddy. We might get a chance up there, huh? Oh,
well,
yeah, there, yeah.
Yeah. So this is the CAD, and I'll go out to this is the chart that I sent out Forex Analytics traders, but you can see we're really on trendline support here, and we had this like wedge. You can see this wedge developed. Let me see here. I'm going to try to grab that red line, but I don't think I'm going to be able to grab it. Anyway, we have this wedge here, and we're like just on wedge support. So we got to watch the CAD here. And I think that's like the risk is, the CAD starts gaining some strength. Joe, who I chat with in our, we have a private room, she was noticing this wedge breakdown of the Euro CAD. That's pretty big. That's a pretty big breakdown here. And if you look, a bit longer term, you got a pretty big stall and break lower. So I would think that the Canadian eventually starts gaining some strength here. Now the risk, I guess, is that you get a little bit of risk off, which we haven't seen yet. We haven't seen any evidence of that. But whenever you get risk off, the potential of commodity currency weakness is always there. So that's something that you got to watch. But for right now, the Canadian currency looks pretty strong. I mean, we've got the Euro Canadian breaking lower. The pound Canadian, obviously, you could see it, approaching some pretty key support here. And if all those start breaking together, let's get rid of this. They all start breaking together, we might see some Canadian strength in unison in the market, and that's I think is pretty interesting. I mean, obviously, if you want to take you want to gamble against the strong Canadian numbers, you might want to be buying Canadian pairs right now, but I don't know. I think that's a kind of a risky proposition. Another thing that that I think a lot of us, and I know I'm looking at right now, is gold. We did that blog post about what if gold broke out. Well, gold, we might have this false breakout, and gold is actually reversing pretty strong. However, the one thing that I'm looking at regarding gold that has my eye right at this moment in time is also the yen, because yen and gold have an inverse relationship. Okay, so if you see, and it sounds like, Nick, is that you?
Yeah, sorry, was I typing too loudly? Sorry.
No, I could hear you. I just wanted to make sure that was you, unless it was Dale that was breathing in my ear. It's all good. but
damn it, I forgot to mute my mic. I'm sorry.
Holding my breath, buddy.
But the dollar yen is at trendline resistance. You see it right here. So we're at trendline resistance, or close to, and we're also near the 618, which if you can just do it like that, we're at the 618 retracement. So we're the dollar yen's at some pretty key resistance as well. So if the dollar yen stalls here, and that could lift gold. But gold looks broken at the moment, but we get false breaks all the time, so I think it's more of a sustained break that you got to look at. But gold's trading really heavy, silver's trading really heavy. They're both trading at lows on the day. And when you see this happen, okay, when you see gold breakdown, the natural instinct at this point is going to be that the dollar starts to gain some strength. So, if the euro dollar, which looks like it's rolling over, and actually Mark Chandler put out a good piece about German interest rate differentials, that it points to a lower euro, which, I mean, you look at the euro dollar, it looks like it's rolling over. It would make sense that the euro would drop. We just haven't seen it happen yet. will it happen? It may, and I think it looks entirely possible the dollar rallies. And I know Nick, since she just muted her mic, she's pretty bullish the dollar too. So I mean that all makes sense to me. It makes sense the way that everything is moving at the moment. But the outlier, I guess, is, well, what about the Canadian? Because the Canadian, I like this. If I see dollar strength, I want the Canadian moving with me. We just don't have that at the moment. I'm not saying that we won't have it, but we just don't have it at the moment. So, just a few things that are standing out to me at this point. With the euro, with the gold, and with the yen, and I'm interested to see, if this dollar yen can actually break out, because if this dollar yen can break out, that does a lot for risk appetite. It would confirm the gold move lower. It would be huge, and the dollar yen's been pretty relentlessly grinding higher, all night. Ever since the UK election. I mean, we pushed down here towards 109.70, and we've rallied 100 pips overnight. So the dollar yen, continues to look really strong here, which
nice picture, Blake. Nice picture.
Yeah, I mean, we're at channel resistance again. I don't know if it's going to break out or not, but it sure does look like it's going to do it. So anyway, just some real quick thoughts. I can't stay long because I've got to manage my positions here. But I just wanted to give you some quick thoughts before I know you have a pretty outstanding guest coming in today.
I'm looking forward to meeting Peter, talking to him. It should be a great interview. He's like I said in my tweet, anytime I see him on CNBC, I turn my volume up. Yeah,
those are the great interviews when you have those types of people that come on. I know I've had a few of those over the years, back when I hosted the Morning Edge, and it's always great to have people like that on. So I'm excited to hear what he has to say. But like I said, I've got to manage some trades right now. I'm gonna pass it back over to you. And yes,
I'm gonna pass it to Steve. Go ahead, Steve.
Do you think, just the first question before you leave, do you also get the feeling that oil is also about to reverse? Because that's the next domino I'm watching.
No, I don't know. I don't really have any particular view on crude right now. It's too weak to be bought, and then too strong to be shorted. But you got something to say about crude on Fridays, don't you, Nick?
Yeah, never sell. It's an outlier on Friday, I said it just because geopolitical risk is always bullish for oil. So people tend to de-risk on Fridays because you never know what will happen on a weekend. And so Fridays tend to be bullish for oil.
That makes 100%. So maybe, Steve, if you're looking for a bounce, then maybe that's it. But guys, I got to get going. And happy Friday to you all. I'm gonna mute my mic right now.
See you later, Blake.
Thank you, Blake. Nick,
I love Ziggy too.
Great prediction of the outcome of the UK election. Also, a great area of where the pound would run into trouble. I remember early in the week, Blake was playing the short side, and then you came on and did an on-the-fly look at where you thought it could go to. I think it was like, I don't know, 970 to 990, something like that. The high was 90. Yeah, can you clean it up and get a little more precise, like you to nail the highs and lows within like a half a pip, Nick? So really, very nice work. And you know what? Adjust your views of showing the other side, which a lot of people didn't think we were going to have this kind of result. I'm sure gave people pause to at least avoid, if not be short cable, to avoid the long side of cable. So excellent work, my trading warrior sister.
Thank you.
Yeah. I think even Steve Olgi was negative, the pound. He was talking about it already.
Actually, so. I think we had this conversation with Nick. I was, if you remember, it was 4 days ago that I was looking for it to roll over from 129, and I don't remember what it was, 30, and Nick came on and said that I'm looking for it to go higher. And I already had a zone there. To be honest, I didn't expect that zone to be tested, but I had a zone, you know, like the last stand, which was between 129.60 and 130 actually. We even wrote on the cable analysis that day. I think it was Wednesday.
You can show your chart, Steve, or Nick can.
Sure, Nick. What of the two? You want me to give you the screen? You want me to take it? What do you prefer? You're muted, Nick.
Okay.
I don't mind. You can show your chart, or I can show mine. You show your chart because you're talking. It's better.
Yeah.
Okay. So this is exactly what we were seeing back then with Nick. This is where when I drew this line, you remember that I expected a retest of this triangle and the 200 DMA. And Nick then said that, and she showed why, that she expects the bounce to come a little bit higher. And that's when I said that, Nick, I actually have this zone that's exactly where you're talking about. And she then made the argument of why it would go higher. And, you know, as it seems, every single one of us were aligned on that on ForexAnalytix. I mean, all the analysis was pointing lower. Greg said so, Nick through harmonics. You remember, Dale, that sincerely we said that I do not believe that this rally is going to be a single drop and that's it, and that the next time we're going to retest this area, it's going to give away. And, you know, for full disclosure, I even tweeted about it, you know, with a few minutes of delay because we were on Skype with Blake and Thelios. I did not expect to see a retest of 127.70, which is the lower side of this area I have, and I did find it an amazing opportunity to short cable. So I'm short from 127.70. It went back to 127.80. But the moment I saw that retest, I actually was something I didn't expect when I woke up in the morning that we would see. And in my opinion, that's a great opportunity because I really find it very hard that one way or another we're not going to test, you know, the 126 area, if not lower, like 125.50 that I see now. This triangle resistance, the 200 DMA is a little bit higher at 125.86. I really believe that this area is going to be a magnet. You know, adding to that the fact that dollar does seem to be reversing. Now, what kind of a reversal that's going to be, it remains to be seen, but, you know, in the short term...
Back to 99.
Perhaps. It's too early to say. It's too early to say.
Well, that's what Dale Pinkert said early in the week.
No. You might absolutely be right about it. So I don't know what's your view, Nick, but I really expect a retest of
I think
this.
You can disagree with Dale Pinkert, but don't trade against him.
Oh no! I mean, what do you think about what do you think about cable? I'm of the opinion that we will definitely test this zone again. What do you think?
I'm a really big dollar bull. I'm trying to not be.
So I'm taking that as an agreement, right?
Yeah. I really am.
Nick is open to new lows to retest those lows or even take out the Brexit lows, aren't you, Nick?
I am. Yeah.
That's what I thought. So then your targets, if this fib level holds in the dollar, now that everyone turned bearish a dollar, is 99 possibly conservative for recovery in the dollar? Are you looking for new highs?
In the dollar index?
Yes.
Just hold on. I haven't got that one.
Here it is, Nick, by the way. I'm showing it in my screen.
And I know that you're also constructive the yen, that probably the potential breakout that Blake showed earlier, your bias is that it's going to happen.
Yeah.
So I mean, both Greg and Nick were, you know, dollar bulls. Nick first.
So I think at a minimum, I think that we're going to go back to 99, 99.30 actually is the level. So
Okay.
the
Yeah,
minimum
that's
level is 99.30 because we're in the dollar index, we're reversing at a 61.8 fib retracement, and they always go back to the 38.2. So that 38.2 fib retracement is
It's
at
exactly this zone,
99.27.
Nick, that I have marked
So
here,
that
right?
is, yeah, so if people are wondering how we measured that, that is from the 4th of May 2016 low to the January 2017 high. So, but 61.8 and 38.2 fib levels are really messy. So that means the market can have a good look, poke the other side of them, but where daily closes are important. So that's what I'm looking at.
Martin
If we do close above 99.27 and continue higher, then I think that is for me, the low is in for the US dollar, and my target is 107.14.
Wow.
107.14?
Yes.
All right. Well, won't that get us close to? That'll get us close to parity in the euro, or maybe under it.
Yeah, close.
Because you would think that would have to happen because the Dixie's so heavily weighted in it that we should take out the 103 low in euro.
Now, a comment on what you said. If that's the case, Nick, if that's the case, if you believe that the actual rebound in the dollar is not just going to be a corrective rebound, but in essence you're talking about the resumption of the previous trend for at least one more bull leg higher, correct?
Yes, I believe that what we have just seen is probably wave 4 down in the US dollar index.
Okay, then that brings a very interesting possibility here. What you're describing is a price action repetition for Euro USD of what we saw. I don't mean the same structure, but I mean the same direction and the same timing of what we saw in 2016 in 2017. Why do I say that? Let's go back to the beginning of 2016. It's here. Okay, let me also grab a drawing tool. Okay, so beginning of 2016. Okay, it's here.
Yeah.
And that was the low. Then we rallied and went all the way rallying to May, right? Look at 2017.
Into May, June. Yeah.
Yeah, you know, a few days of difference. By the way, you remember how many times we've talked about seasonality, Dale? Look, the low of 2016 was during the first days, and look at the low of 2017.
Yeah.
There's one thing that they have in common. The Fed hiked in both December meetings.
Good point.
Good point.
Good point, and I'm converted.
Good point. So Nick, this is what you're seeing then, right? Am I right on that?
Yeah.
And Nick, you're muted again if you're trying to talk.
Buddy.
I'm using Fibonacci for it, and yeah, I do agree about the seasonal trade in euro, but that's not the only reason why I view it this way. But yeah.
No. I didn't say that's the only reason, but I said that if this scenario plays out, then we will have in quotes some kind of a fractal, let's call it. It's not exactly a fractal because the price action has not followed, but as a behavior, it's going to be the same kind of behavior.
Yeah.
Okay, interesting. That's interesting, actually. Let's see how it plays out. I'm taking it one thing at a time. I'm seeing the break of this wedge here.
I don't know what you thought, but I thought the ECB were really dovish yesterday. So,
Nick, I kind of disagree there. Draghi is doing his best to be dovish. I mean, in the things that he can say, whatever he wants to say, he's playing it as dovish as possible. But on the other hand, the data are showing a Eurozone recovery and the risks are abating. I know that, the data was balanced yesterday in comparison to the previous month, because what they did was a minor downgrade in inflation and a minor upgrade in expected growth. So more or less, let's say those two balance each other out. But other than that, you remember how many worries about the Eurozone were out there like a few months ago. I mean, nobody seems to worry about anything anymore. We don't seem to have any strong or imminent risks. Growth is definitely rebounding. QE has obviously helped. Broad money is expanding. I mean, I don't know. Lending is expanding. I don't know. I'm really a believer of you know, the euro rebound in general, but not in the short term. I mean, in the short term, it's obvious that we're going to have some kind of correction. And Dale, as it seems, the 111 guys that Blake mentioned might actually manage to get there today with a little bit of effort.
Yeah, the option premium guys right now have to pay up 74 pips. The call,
yeah, which isn't the end of the world, to be honest, but
yeah.
Yes.
Well, it depends where they sold, how much they took in.
True. That's
Yeah,
right.
and you know what I've noticed in options sometimes, Steve, is the expiration like this, they're going to make the writers pay up, and then it'll drop on Monday. And, you know, if they had another day or two, happens on the other side when you buy them too, like you're long the call. Usually, you know, you're not going to get paid, and then the next week they begin to work. So it's amazing how most of the time they can just pin the market to the strike price.
You're right
I pay a lot of attention to it. I think it could be a great tool for traders to pay attention to huge open interest levels and expirations in the market to give them, you know, kind of an understanding of which way the pros are leaning, and they usually win. So that's why not a bad idea to follow that. You know, Blake's friend that told Blake about it reminded me of something I used to focus on. It's, you know, I found it to be quite helpful, even more helpful than a COT, because, you know, you're looking at a time when an option will expire, so it almost gives you a little bit more helpful timing that the COT does not. So that's my coach. That's my coach. That's my coach Popovich for the day, buddy.
You're absolutely right, because COTs are always backward looking anyhow. We get them on Friday. They show open interest on Tuesday. So even when you get them, in a sense, they're old news. In a sense, though, because when you see extreme positions, you know, you always know that an extreme position cannot change over 3 days unless something, you know, very dramatic has happened in the markets.
Baki is saying, and I've watched Baki trade, and a lot of his calls, he's very good. He thinks there's still a shot, and I think even Armand's chart showed that we get this break, I don't know, like to 980 or 110, and this is a 4 on a shorter term time frame, and then you get one more up towards that 1320 level in the euro.
It is likely, but listen, in the short term, the euro does not look healthy. Yeah, I was going to say that's the alternative. That's my alternative view. Yeah, in the short term, the euro doesn't look healthy. But if you look at the medium term here, I mean, what levels have we broken to get us medium term bearish?
Because it still looks like incomplete to me. I see 2 drives. I know it's a one-trick pony for Mr. Pinkert. You know, the old 3-drive formation, and I've seen 2 drives and moves. But when I look at this, I look for, you know, it looks incomplete still to me.
It is likely, and to be honest, we have a confluence here. It's the confluence of the ascending channel and the support resistance, or you can call it supply-demand zone at 111.40 roughly.
And if we got up to 1320, that would be, you know, I'm not the Elliotician, Nick, and you know more. That could be an ending diagonal up there, right?
That's one alternative. We can also perhaps, let's say, push and tag the 78.6. That can also trigger you know, a lot of stop losses of any open interest that was here in the election high.
Right,
So,
and after the last few days, all of those people are exhaling, going, oh.
Exactly. So if we're looking for the scenario that would get the market most you know, messed up, which very often it's what happens. Yes,
mean Mr. Market, mean Mr. Market.
Yeah, exactly. That would be an ideal scenario. Another push higher, you know, triggering stop losses, getting more people trapped, being bullish, and then a reversal. Yeah, that's a possibility as well. But on the short term, you remember I showed this wedge yesterday. I said I'm monitoring this. You know, it's less important to me than the channel, and that still applies. But the price action now shows weakness, and we need to see how this is going to move on with the DXY. I'm not so forward-looking in the dollar index as Nick is or Grega is. They're both bullish, and I trust their point of views. You know, not only because, you know, I've tested their point of views. I mean, we've been working together for you know, it's been more than a year, and you know, I know that their ability to look ahead is very good. I like to take it, you know, more of one step at a time. I do see a reversal in the DXY now from a personal perspective, telling you that this is the end of a correction lower and we're heading to new highs. It's too early for me to do. But I take, you know, their point of view very seriously into consideration. But I need to see more from my perspective. But to be honest, you know something, even if I'm not looking so much forward, I'm currently already short 2 dollar pairs. One of them is pound. The other one, if you remember from yesterday, is the Kiwi from this retest. And finally today it shows some follow through. It's still early, but if we close...
Also a great call that you showed a few times and we talked about midweek was EuroCAD.
EuroCAD, yes. Blake wasn't aware of that, you know, because he's been, you know, this time is not very convenient for him. But yes, we had shown EuroCAD since the beginning of the week, and it has actually finally broken. It has also triggered me short. Thank you for reminding me, because I had a limit order at 150.60, which is, you know, the low we had 2 days ago. So I'm now also short EuroCAD, and I even don't have a stop loss at the moment.
Okay, so you stop yourself in with the GTC on a breakdown.
Yeah, listen, I haven't considered yet what I'm going to do with this trade.
No, I mean you entered the trade on a sell stop.
I do what? Sorry, Dale?
Well, you had a good till canceled order. You said at 50.50 to sell it.
50.60, yes. 50.60.
Okay, so if you had that and it wasn't there yet to enter an order on a decline, what did you do? Have an open, a good
no, I had an order to go short there and it got triggered, but I haven't set a stop loss yet.
No. I just don't know how you do that. That's all.
No, it's, you know, very easy through my broker. I just put an entry order. That's it.
Okay.
And you don't need to set a stop loss. So, you know, the wise thing to do here is set a stop loss above here. But, you know, this is a trade. I have this. I'll tell you exactly what's troubling me. It's this zone that's troubling me, that might provide support again. So what I'm going to do with this trade is that I'm going to keep a close eye on it. I'm going to put a very wide stop loss for the time being for the weekend, which is going to be above 152.70. But my intention is to monitor more closely this trade and trail it very fast or get out of it very fast. If I see some big rejection from this zone, which is at around 149.70, I might actually bail, because I already have a handful of positions in my hands. Luckily, the vast majority of them are doing good, so I don't need to get involved with something that's not going to work out immediately on my side, you know what I mean?
Mm-hmm. Nice.
So that's it. Now about oil that I was talking about, this is what I see with oil. It's we get an inside day as well today. For the time being, it's a hammer. we are holding the 78.6, and we're also holding the closing lows, because it's, if we disregard this week, this long week that we had lower that took us all the way down to 143.80, sometimes you need to monitor the closing levels, and those 2 days those 2 consecutive days we both closed roughly at $45. I mean, you know, just a couple of cents of difference. So, you know, I had drawn this as a possibility, but now perhaps this is a possibility for oil, and this is something I'm watching. I don't have a position, and I don't expect to have a position in oil. The reason I'm monitoring, except the fact that, you know, obviously this is an important thing to monitor, is the fact that I'm also considering of getting involved with USD CAD again. Blake went through it, and if you remember, we had seen it multiple times the past few weeks, and especially the past few days. We are again testing this channel support. Today's candle so far is an outside black candle, which is quite bearish. Once again, we failed to go over the 38.2. I'll reiterate what I said, you know, like a few days ago. This price, I think yesterday as well, this price action has nothing bullish to it, nothing.
Yeah.
Nothing. I mean,
we didn't even take out that high from last week. I thought we might do that.
We don't even seem to be able to do that, as you say.
Well, that's what I mean. Yeah, I mean, it couldn't even
I'd like to see
it
Gregor's view of this, because I find the dollar Canadian the hardest one to read. So
let's actually, you know something? Since Blake calls me Freebie Steve, let's give Gregor's point of view for everybody here to see.
Gregor's joining us, actually.
Oh, he is. Sorry, I didn't. Let me see. Just let me scan chats and we'll be there in 30 minutes. Yes, you're absolutely right. Okay, anyhow, I already saw it. So this is what Gregor sees as well. He's going to tell us live what his targets are. But as you see from his chart, the interpretation of a bear flag is exactly what he sees, because as you see, this is a recent chart. I mean, this is a bear flag. This is a daily. Let's go down to the 4 hour. This is exactly what he sees. And actually, this bear flag, he's seeing like a triangle, most probably. And alternatively, he sees a retest of 136, which is indeed, as we've said many times, the line in the sand, having to do with maintaining a bearish bias.
I'd like to acknowledge Gio and Essie. Gio, thank you for sharing your ideas. I could tell I pulled up your bearish bat formation in Euro. And
thanks, Gio and Essie.
Do you know him? You know Gio?
No.
ABCD target 111.30 in Euro, but then he also showed a daily bearish bat on Euro. So nice work, Gio. Glad to have you part of FACE. Thanks for sharing. Okay, go ahead, guys.
Yes, so USD CAD, as we've repeated almost every day the last few days, I'm really bearish. I mean, I don't have a trigger yet because we are barely holding this flag formation, but as I said, I mean, I can make no bullish argument here, not whatsoever.
So
no
38 to 34, you should take it to 130 and a half or so. That's about a 400 pip flagpole if you just do basic technical.
Yes. Let's make an extension and measure it exactly. But I'm going to tell you again that keeping minimum expectations, my next target would be, let's see, by the way, okay, it's 131.40, but my first target would definitely be this zone that I've marked here, which is at 132.70, because this is a zone that has acted as support and resistance multiple times. But you know something? The risk reward, anyhow, even if that's where we get, the risk reward is there, because let's say that you want to trigger a short on a break below 134.20, then you would need to have a stop loss at 135.50. That's 130 pips. and you're looking for roughly 150 pips as a first target. So the risk reward is there. It's a little bit higher than 1-to-1, even for this zone I've marked here. So I think this is an interesting trade.
Thank you, Steve. Is Grega ready?
Grega? I think he's just logging in
We
actually.
needed a couple minutes.
Perhaps he's just logging in because I don't see a microphone sign next to him, and that usually happens when... Yep, here he is. Grega.
Hi,
Hey.
Ryan Cook.
Hey, can you hear me?
Yes,
hi, Grega.
we can hear you perfectly. And we were just going over USD CAD, and being freebie Steve, I also showed your point of view in USD CAD. As you know, we are on the same page with that. I'm seeing a bear flag. You are actually, from what we saw from your Elliott wave analysis, you're possibly seeing either a complex correction or a triangle, and you're also looking for a move lower, right, my friend?
Yes, exactly. We have seen a nice sell-off following the employment numbers. So yes, I think we are going lower. This sell-off from the last hour or so just confirms that we are in some kind of consolidation, and that sooner or later we may retest those lows from May 25th.
Okay, let me pass the screen over so you can...
IBW. Grega, excellent work. I opened the show yesterday with your bearish tradable pattern on cable. Great call. Excellent, excellent work. Yeah.
Actually, it's still active, but I just think that I will close it before Friday today. I just think that market will now stay sideways. It has moved quite a lot, more than 300 pips. So it's time for some consolidation. Which screen do you see?
See, you're a Aussie up.
Yes.
So 1 hour.
Okay. So actually, we can take a look at dollar CAD first. So yes, I was looking here for a potential deeper correction of wave 4, let's say as a flat correction in 3 waves. But triangle was my primary idea because I have spotted here several resistance points. So actually here was former wave 4 normal. This is the most important zone for reversal. So we have seen a first sell-off here where I labeled wave A, and then I suspected that it may happen the same for wave C, especially because market stayed sideways for the past 24 hours before employment figures came out. So from a technical and a timing perspective, I was quite sure that we may see another dip lower, or maybe just a spike up and then turn to the downside. So I was looking for this weakness today for Friday, but it looks like that those lows from May 25th may still stay in place because we need this wave E bounce that may unfold maybe, let's say, early next week, maybe on Monday, and then we go back to the lows. Crude oil has seen a pretty nice drop. I think it came lower yesterday or 2 days back, but dollar CAD did not respond so much to the upside. So I still think that crude oil is searching for some base, but as you know, lows are can be long process. So I just think that next week when crude oil may see some upside, I think that that's time when dollar CAD could break to the downside. Also, here is actually a more visible triangle. I'm looking now for a wave D as a set, and if I label this, actually this should be red letters. Maybe that's a free wave decline, and the traders will know that each leg in a triangle should be made by 3 waves. So I would be looking for something similar here for wave D as a set on Monday, and then we go back to the lows. And if we will see this 5th wave down now, this would be even more exciting, because then from this high, from May high, could be counted in 5 waves, and we know that this is, as you know, Dale, yourself, this is probably one of the most important structures when it comes to trend changes. So in such case, I would say that this rally could be finished and that we are going much lower here. But again, it depends how dollar overall will respond and how crude oil will react as well, for sure.
Speaking of that, Greg, I had a little bit of a look on the on crude, a couple of minutes before you actually logged in. You want to go over it yourself now, since you also mentioned it?
Crude oil. Actually, we have seen a nice dip, but still, I'm not really sure that we will see a break of 44 level. We are at probably the last most important fib level, 78.6%. Also, from that recent high of May 25th, you can count.
Double zigzag.
Yes, 7 lakhs to the downside.
Double zigzag.
Plenty of overlaps here, so there's no way to count this impulsively. That's why I'm thinking that we may see a bounce next week, and ideally a third leg to the upside could start. But from a trading perspective, I would have to see break above 48.38 before I may consider maybe some long setups here for crude oil, because actually here now is very good risk reward trade, but move is not confirmed. So my approach is a little bit more patient. So I definitely want to see this bounce before I may go with the flow, as I said. But technically speaking, here on daily chart, still looking for a corrective move down from January highs and expecting uptrend to resume, but it appears that we will have to wait a little bit more longer for this than I first thought. So maybe now we can switch to pound. This weakness today was very interesting, but again, a lot of traders who probably woke up into the London session and US session maybe will try to trigger new shorts here, but because move was already extended here on the intraday.
Hey, that's me. I went short at 27.70.
You were shorting here, so you wake up a little bit late. Yes, actually, there's a nice resistance here, but still, because it's Friday, I just don't see that there will be momentum coming in today for the US session.
You know, I'm not a scalper. I shorted 127.70 to hold days. I don't mind, you know what I mean? I'm not looking to make money today.
Till Monday. Yes, I know.
No. I'm absolutely fine holding.
Actually, I would be looking maybe for new shorts, but after a free wave bounce, maybe retest of wave 4. There's also definitely a nice swings resistance here, which I believe you were watching yourself.
Yeah, exactly. That's the zone I was watching exactly.
Yes, actually there was a very strong momentum to the downside. So technically speaking, there is a bearish in play as long we are beneath this invalidation level here at 129.78. So ideally we will see just another wave 2. Let me label this. 1, 2, and then go lower for a wave 3 of an extended wave 3. So that would be my case. Also, this, as we can see, this is much stronger sell of the previous decline in 5 waves for wave 1. So it means that bullish momentum is increasing. Bearish momentum is increasing. Bears are much stronger than the previous wave 1. So this is exactly what you want to see when you're expecting wave 3 to be extended wave.
So we're currently within 2 of 3 of a new move lower, correct?
Yeah. Ideally, that's the scenario, yes. So I would be expecting more downside after this ABC bounce. Okay.
It helped a lot of people this week, Grega.
Really?
Yeah. Yeah,
That's great.
with the pound call. Yeah, with the pound call. Yeah, do you like my new nickname for you? Wizard of Waves?
Yes,
Huh?
it's good. We are always...
I like that.
You know, maybe you get a logo with you on a board, you know, and a wave holding up an Elliott count.
I think there's a
think?
wizard in Gregor's Twitter avatar.
Oh, okay. Yeah, there you go. Wizard.
We are all wizard in some way. So what I wanted to show you, I'm sure that Nick wants to see some charts of Bitcoin. Is that true, Nick?
Yeah, there'll probably be people here wanting to see Bitcoin too. So
Actually, I'm not sure. What is your view? You expect some deeper pullback?
every time in these cryptocurrencies that I have expected a deeper pullback, it's not happened, and they've just consistently been so much stronger than I've expected. So I'm kind of trying to temper my correction expectations.
Yes, actually, when a lot of people expect correction usually don't occur, right?
I know. So
actually, what I'm looking here is, I was looking for, as if you remember from a week back, I was looking for some more complex wave 4, but
yeah,
it appears that we are already in wave 5 here. And yes.
Exactly, and wave 5s are really hard to predict, aren't they? Because there's like less rules, I think.
Yes, and actually
in surprise you.
And in markets like this, there's a huge potential for wave 5 to be extended. I would really not be surprised if we see, I'm looking definitely for some more reasonable targets, okay, because fifth waves are definitely very hard to predict an extension. So I need to stay a little bit more careful here, but see room for maybe $3,400 and then possibly even higher levels if we see a real extension.
I completely agree with my fib extensions, and I think Ethereum looks even more bullish, doesn't it?
Yes, actually I have charts here. For short-term traders, I think that this on Bitcoin this decline should be very important if someone is trading intraday. It was a clear three-wave sell-off. It just confirms that we are going higher. So yeah, that was very nice for today. Actually, Ethereum. Actually, I have it here. Okay. This one could, as you thought yourself, could outperform Bitcoin, right?
Yes.
So
I remember the theme song to Ethereum. Ethereum, Ethereum. Oh no, that was Aquarius. Sorry.
So Coach Popovich is in a good mood today.
It's Friday. We are all in a good mood.
I'm usually pretty crabby, aren't I?
Actually, what I wanted to say that Bitcoin is, what I see Bitcoin is in a fifth wave, but Ethereum can be in a wave 3. So I personally, I would look for this pullback and then maybe try to join the uptrend. I'm not in any cryptocurrencies because I ignored them for the whole time. I don't know, probably that was not a good idea, but when I saw Bitcoin trading around $400, $500, it was still so, I don't know, it was looking overbought back then. So what is now then if it was overbought at $500, you know? But if you take a look, maybe some historical charts when gold was trading around $300, and look where is gold now, okay? So definitely there are times when you think that market is overbought, but if you think that we are still some early phase of these new currencies, then potential, I think, is really, really huge. So despite the overbought zones, I would pay attention probably to corrections and maybe try to ride them.
Markets that really trend like this are really good for trend following strategies like moving averages and trend lines. You just, if keep buying dips until it's over.
Yes. How many times you can be wrong, right?
Exactly.
Yes.
Gregor, people are asking, and to be honest, neither Nick or I or Blake just showed it temporarily. I mean, he showed a short-term view on that. Do you want to show us a medium-term outlook on what you see in yen pairs? Let's say mostly USD yen, but some people are also asking about the GAPI and Euro yen.
I will take a look on dollar yen. Okay. Actually, there was a nice reversal this week on dollar yen, and I have been talking about these gaps for a very long time. Those gaps are probably one of the best approaches when you want to predict a reversals. Firstly, when they are opened, you will expect they to be filled, and when they are filled, they will cause and make a new reversal again. So we have seen a nice pullback down from start of May, and recently we just filled this gap at 78.6%. I can count 3 waves down against previous clearly impulsive run, and we are now higher again at this upper channel resistance line. Today is Friday. It looks like that we will close quite bullish here. So if we'll be able to break this trend line, then I would probably look for some pullbacks and maybe try to play on the long side here. Also, gold came down with 5 waves, okay, from 1295, and actually the reason for sell-off on gold was probably on 10-year US notes, which also came to the downside. So all 3 markets seems to be in a very good correlation, which means that if gold, because of 5 waves down, suggests more weakness, okay, then 10-year US notes prices will also stay in a bearish mode, which means that yields will rise, and thus it will support dollar yen. So I would look for bullish dollar yen next week. Gold has definitely more downside. Here is this gold count, clear 5 waves down. We are now at some short-term FIB support level, so watch out for this 3-wave bounce, and then next leg down. It looks like that we have here made, I don't know, it was a new high here. I think it was. It looks
doesn't
like
really matter because it counts as a double top regardless. I mean, you know, double tops are not.
To me it matters because I'm sure that there was a lot of stops. So when stops are cleared, market turns. So for me it matters. But
I think it was incrementally a new high. I think incrementally.
Yes, enough for tick to stop them out. So actually, what I think is happening is that we are going to see at least 3-wave drop. So 10-year US notes should stay bearish as well. Actually, I have here this one also. I think I also showed this chart already a few times in the webinar. We have 3-wave rally, and potentially that's a wedge pattern here called an ending diagonal. We are trying to break this below lower support line. So if we stay bearish here, then gold should weaken and dollar yen should rise, I guess. So generally speaking, dollar yen, I see it turning bullish again.
And
yes,
Gregor, the $1 million question is the following. Indices, especially, indices, especially the US indices, have shown a complete disregard of any correlations when it has to do with the way they're moving. I mean, USD yen was dropping, they still kept going up. USD yen was climbing, they were still going up. Other correlations that they have, they reverse as needed as long as they keep climbing up. So the question here is, how do you think if we indeed get a dollar reversal, treasuries, USD yen, etc., do you think that that's going to just boost risk appetite even further, or it's going to make not much of a difference?
I think that stocks will rise further. I think that dollar yen will now catch heavy gains for stocks. Stocks will continue higher. I see on DAX. Nothing else, just correlate, just another correction with an uptrend. I don't see a reason why to fight this. So here, a clear sideways price action. We haven't seen much of the moves of breakouts lately, so I think there are more upside coming on DAX, and same for the S&P 500. So I believe that dollar, yen, and stocks maybe could potentially move higher to higher levels together.
Yeah, it only works one way.
Yeah.
They don't go down together, but when the yen rallies, it helps the market. That's amazing. I know what you're saying, Steve. All right, well, Grega, thank you. Peter is in the room now, so I'm going to hand Peter over the controls now. Really looking forward to talking to him. Grega, thank you so much for helping everyone have a good month this week.
Thank you.
You're an excellent warrior. So here you go, Peter. Looking forward to hearing your voice. And you have a screen if you want. If not, I'll take it back and I'll show your blog.
Just unmuted him. He was muted. If he can try speaking again.
Okay. Can you hear me?
Hey.
Yes. Hi,
Yes.
Yeah.
Okay.
We can hear you, Peter. How are you?
Okay. How you doing?
So nice to meet you. I want to thank you for taking the time to be with us
Thanks
today.
for having me.
And what a day to talk about all the news that's been in the markets, Peter. I first want to say that I followed you. Every time I see you on CNBC, I turn the volume up so I could hear what you have to say.
Appreciate that.
You know, you're kind of a voice of sanity during a mania. And am I accurate in saying that, you know, you haven't fully embraced this blow-off bubble type move that we've had in equities, and wondering where your head is at now, even though the market still looks like it has legs?
Yeah, no, it's not easy being a value guy in this type of environment. It's very difficult because you know how it's going to end. Therefore, it keeps you from joining the party, but you, of course, then have no idea when it's going to end, and then you risk missing a bunch of the party. So it is a difficult situation. I do think that we're reaching some major inflection points in that you know, central banks are reaching or beginning to reverse their policies. So I think that is going to be very relevant, and I don't know when, but I know they will start to care. But again, it's figuring.
Remember the old expression, three hikes and a stumble? So
yeah, but you know, I thought the end of QE was you could have considered that like multiple steps, and then we had 3 hikes. So to me, the first hike really wasn't the first hike; it was the end of QE. That was the first form of it. So, yeah, we're through this process, and yeah, we're going to stumble. The actions of the ECB and the BOJ have definitely pushed out when that stumble may occur.
Does currency fit into your equation at all, Peter, when you're looking at the globe, and you know, the dollar being the kind of the linchpin that all things spin around? You have a view on the dollar?
Yeah, I mean, I'm not. It's a linchpin. I don't know if it's the main. If it could be one of a few different linchpins, but of course it's. You have to look at it in many different directions. You know, the bull case in the dollar and what was responsible for the sharp move in the dollar was, okay, the Fed is going to embark on a multi-year rate hike cycle by the dollar, and that of course has been a flawed assumption, because you really have to look at real rates, not nominal rates, and real rates are actually below where they were when the Fed started raising interest rates.
What's going to change that? The Fed would have to be much more aggressive because yield curve flattening or if they're more aggressive, it may even invert. What do you think is going to happen there?
Yeah, well, the Fed being aggressive, it's all certainly relative right now. The Fed made the classic mistake of central banking in that they waited until after they met their so-called mandates to start raising interest rates rather than going to where the puck was going. So this forces them to be hiking rates in the 9th year of an expansion when the economy is slowing. So they're in a no-win situation either way, because we're approaching a moment where they over-hike in the context of where the economy is right now, and then leaving them with not much ammunition on the downside, or they sit here and do nothing because the economy is rolling over. So either way, we're going to get to the economy rolling over. It's just a matter of whether it happens on its own after 3 hikes, or it happens because we get a 4th or 5th hike in quantitative tightening.
Okay, so when you think of the Fed, remember it was only a year ago that the market would shudder just thinking that the Fed might raise rates, and now people are embracing that the handoff of not needing the central bank to the economy taking over. The handoff is complete, even with all the dysfunction in Washington. Does that play into your equation of what could derail this market, because there's so much optimism built in, even though it's been, many of the Trump trades have unwound? It seems like the market's highly concentrated in the FANG names that's driving up the averages.
Yeah, well, it's those names in addition to consumer non-durables and utilities. So, what does that tell you about the viewpoint of the economy? And also, of course, that's also happening with the flattening of the yield curve. So that's all sending, interestingly, the same message. But when you look at the headline indices and you see the stock market continuing to go up, you just assume that everything is participating, but not everything is participating. But it's still in a rotation mode. No one wants to be bearish, and everyone wants to be part of a further rally.
Right. Yesterday, the banks that have been really hit hard came back, and now we're probably getting to a place where oil's due for some type of recovery here, and they've been lagging. So they'll rotate into the weak sisters, maybe even buy some retail. So this ongoing rotation is market money doesn't leave the market. It just rotates from taking money off the table and things that are overvalued, and then begin to buy things that have been hit.
Right, and that may continue until we have some sort of accident because of monetary policy, and the market's going to just rally themselves right into more rate hikes. And as dovish as Mario Draghi was yesterday, I think he's running out of rope, and that we are going to get, we have to get direction by September on further tapering, because as of now, they plan on ending QE in December. But
yes,
look at today.
I have your book report up here, and that's your lead story. Draghi won't stop until 2%.
Yeah, and just as Kuroda won't stop, but they're realizing they can buy every asset in the world, and if they don't, based on their theories, they'll just buy every asset of the world until they get to 2%, and when that happens, and they still may not get to 2%. So I think that Draghi, I think is just losing credibility as every day goes by with his policy. And when you think about what got us here to these levels in the markets and to these valuations, and another quantification of valuation is yesterday the Fed came out with their flow of funds statement, and I talked about it in the book report today, that net worth as a percent of disposable income is at 162%. And in March 2000, it peaked at about 610, and in 2006, 2007, it peaked at about just shy of 650%. So we are at all-time record highs in the value of assets, juiced by zero interest rates for many years in QE relative to the actual economy, defined as disposable income, and this is rarefied air. And yeah, they can continue to push it, but what upsets this is central banks. And I still believe that this is the first year in this grand experiment that all 5 central banks are going to be cutting back in some fashion. We know the Fed's raising. The ECB is going to announce another taper in the latter part of the year. The Bank of Japan is doing a subtle, very subtle shift in policy in that they're focused on yield curve control and not necessarily on as many bonds as they're buying. They're actually buying less bonds. The Chinese are certainly cracking down on excessive credit growth. Bank of England is probably not going to raise because of
the Chinese
political situation.
Peter, yesterday or a few days ago that they were buying U.S. Treasuries, which to me is kind of like...
Well, they're the second biggest holder. They've been buying U.S. Treasuries for a long time.
Yeah, but they're looking for people to sell into when they announce they're buying.
Yeah, I mean, all they're doing is, their holdings have been trimmed by a few $100 billion over the past year because of their reserves. So if they stabilize the reserves, by nature, they'll buy some more Treasuries. But it's not going to be like it used to be when their foreign exchange reserves went to $4 trillion. So their buying of Treasuries is going to be modest, but at the same time, there's been foreign selling of U.S. Treasuries for 2 years now. So just because they start to add, it's not going to be that much relative to the historical buying pace, and other central banks and other foreigners have been selling.
So even if the 10-year, Peter, trades under 2, trades 1.9, 1.8, that's still a higher level than the 1.3, and this has been a one heck of a maybe cyclical bull market in a secular bear in bonds. Do you think there's a potential that after this bond rally runs its course, that eventually we're going to start heading back up again? People would call this, if you're an Elliottian or a trader, you put in a higher low in yields, that the next wave up in yields is going to be bigger than the first bounce was from 1.3 to wherever it ended up at 2.6. That could be the pin, that it's not about the Fed, that it's going to be about bond vigilantes or some kind of currency problem eventually happening that drive up rates, not because of growth, but because of confidence?
Well, the way I see things is that the 135 in the 10-year in July 2016 is a low that many of us may not see again in our lifetimes, as it coincided with the UK referendum vote, when you had the collapse in yields around the world, where the Japanese 40-year yield got to 7 basis points, 40 years out, 7 basis points, and now is back to almost 1% after trading above it. So I think those hold. I think there's going to be, until we get to that next bond bear market, you're going to have the Fed that will continue to flatten the curve. But the real epic bubble is in the European bond market. And when
Interesting.
The ECB and Mario Draghi, as we get into 2018, as they further taper, that's the grand accident or train wreck that's waiting to happen. And I'm most interested to see when the German 10-year is no longer at 27 basis points and it's at 1%, for example, where the U.S. Treasury is going to be. The U.S. 10-year is going to be because of their high correlations. I mean, people forget in 2015, the German 10-year yield on an intraday basis got as low as 6 basis points. A month later, it was 60 to 65 basis points, and a month after that, it got to 1%. A 6 basis point move to 100 basis points in 2 months for a German Bund is a rather dramatic move.
Yeah,
so I think that the European bond market is an area of a bubble of epic proportions, and that unwinding, again, as the ECB gets deeper into their tapering, and imagine if one day they actually get out of negative interest rates, what that does to bonds across the European yield curve, particularly in Germany with negative yields out to 7 years, that will drag up interest rates around the world. Okay. So I think that's what I'm mostly looking for in saying whether the 10-year U.S. yield will break above the 260 levels, really what happens with the European bond market, again, as Draghi announces another taper by September, and I'm sure they'll hint at it before then.
Martin Armstrong's domino theory for a sovereign debt crisis was Europe first, Japan second, and then the U.S. You see any dangers? Right. Go ahead.
No, because, well, yeah, I have to agree with that, because Japan at least can hold theirs together much easier than Europe can because of obvious reasons. But yeah, it'll start in Europe, and it will coincide with Draghi's tapering. And
what do you think that does to the euro? Send it under parity or up to 140?
Well, actually, at 105, I started getting bullish on the euro because everyone was so bearish on it, and I felt, well, if the dollar can't rally, I mean, when the euro was 105, you had extreme divergence between the euros, the ECB, and the Fed. The euro couldn't break below 105. You had all these political worries in Europe, couldn't break 105. And I said, you've thrown so much at the euro, and you still can't break 105. Now, all of a sudden, you have political calmness in Europe, and you have the ECB, again, notwithstanding the dovishness, notwithstanding Fed rate hikes, the euro trades pretty well. So I think the pain trade is a further rally in the euro.
Interesting.
And I say pain trade, I say pain for the dollar bulls.
Right. Okay. Interesting. So I wanted to ask you about a couple of the business models that you have, because I want to encourage our community that's watching us now and anyone who sees the videos on what you do. I see that, what is the Lindsay Group? Are you a registered investment advisor?
Yeah, a couple of things. The Lindsay Group is economic, macro, and market research / consulting firm run by Larry Lindsay, who is a former Federal Reserve governor in the mid-90s.
Yeah.
What's that?
Okay, so you've been marrying up in the business. So very good. How about you're a co-CEO at Bookmark?
Yeah, so Bookmark Advisors is an asset management business, and we manage other people's money under the umbrella of Advisory Services Network, and then have the book report, which is basically my market research product for Lindsay that I sell to more of the mass market audience that can't afford the institutional prices that we charge for Lindsay Group.
So let me ask you this, and I know it's probably difficult, and it's possible that you could have a view, but you don't fight the tape, and you're managing money for people. What's it like in this environment when people want to get aggressive and want to put all their money into equities? How are you advising people now?
I mean, I lay out. I said I put it into context for them. I said this is the second longest bull market of all time. The Fed is now raising interest rates and no longer doing quantitative easing. And again, granted that other banks are doing it, we are tightening credit. The cost of capital is going higher. The U.S. economy is slowing down. I said, is this really the time? And valuations are literally off the charts in some ways and very close to being off the charts in others, and a variety of metrics. Is this really the time to go in head first? So I try to explain to people that you have to have the big picture, and that we've pulled forward many years of returns by having valuations this high, and that the price you pay today is a key determining factor of your return going forward. And I try to temper, those animal desires to catch a market that is more attractive just because it goes up, and try to explain to them stocks are actually more attractive at cheaper prices. So with our clients, we actually have a smaller weighting in equities, and we have a decent size weighting to overseas markets, because that's where I've been more positive on, particularly emerging markets like Brazil and South Korea and India, where I see more interesting stories, more interesting valuations. The U.S. stock market's a bubble, and if you want to invest in a bubble and think that you're going to get out at the right time, then go do it. But I'm not one of those guys.
Peter, thank you so much for being with us today, and
thanks for having me.
Appreciate your. Yeah, it was great to meet you, and I encourage people to follow you at Peter. Your Twitter handle is @pbookvar, and here's Peter's blog report, and you could reach him at the Lindsay Group or Bookmark. And I wish you all the success, and I know it's not easy to be a skeptic and a market like this. I'd like to wrap it with one last
Be a lonely
question.
place.
Yeah, well, you could always call me. I have an ear for you, Peter. But can you wrap your head around what's happening in the cryptocurrency world, and do you think it's symptomatic of anything?
I think it's really the gold bull case that's manifested itself in these cryptocurrencies, and
Okay.
everyone wants to hide out and walk away from fiat currencies, and they're doing it in what's sexy to them, and that's the crypto stuff. But it's at the end of the day, it's gold is the only true form of money.
Okay, well then don't wait to buy gold and wait.
Yes, exactly.
Peter Bookvar. Thank you so much, Peter. Have a great weekend.
Right. Thanks, you too.
I'm glad I met you. Maybe we could get back together down the road.
Sounds good. Thanks.
Thank you, Peter. Everyone,
Okay,
that's
bye-bye.
Peter Bookvar. Thank you very much. Okay, Face, I hope you have a great weekend. I enjoyed working with everyone this week. I think we had some great interviews and capped it off with a very intelligent thinker, market thinker, Peter Bookvar. I want to thank the whole team. I want to thank Steve for backing me up every day and making sure there's no dead air. I want to thank Blake for coming on in the middle of trading, and Nick for, even though it's not a convenient hour for her to come in and share her views, and Grega, what a star he was this week, and Stelios. So thank you very much, Gwen. And so consider becoming a subscriber in case Freebie Steve isn't around forever, and I hold back on Grega's wave counts. So remember, most of all, don't just count your pips, count your blessings, everybody. I consider working with the ForexAnalytix team and this whole community, guys like Hardianto and Anthony and Gwen and Dimitri and Valu. Thank you for editing our videos that everyone could see on YouTube. Have a great weekend, everyone. Adios.